This is SFNet Presents In the Know with host Barry Bobrow, sponsored by Hilco Global.
Well, welcome to the next episode of the In the Know podcast. I'm your host, Barry Bobrow. My guest today is a good friend of mine. We own houses near each other in two different locations, but more importantly than any of that, Gary Michel is the former CEO and chairman of JELD-WEN Holdings. He's a former member of the executive team at Ingersoll Rand, and he's a current board member of Cooper Tire. Gary's here to talk today about building products, consumer demand, housing, and anything in between. And I think you'll enjoy the discussion. So let's bring Gary on. Hey, Gary,
Hello.
Thanks for joining today.
Hey, Barry, thank you for having me.
Yeah, Gary, before we move, you've had a number of jobs, and the favorite job you had was when you were part of Ingersoll Rand, when you were the CEO of Club Car. And we don't have to get into that too much, but that was a very cool job based in Augusta, Georgia. And I never properly thanked you for helping me get into the Masters that year.
Well, I am glad you were able to come, and it certainly was a cool job. You know, one of my favorite things about that job was visiting our customers. I was required to go to a lot of golf courses and a lot of great venues.
Yeah.
So certainly enjoyed it.
And a great product too. So, hey, Gary, we're really here to talk about housing, building products, supply chain. Let's start with the housing market, something that you follow and have followed very closely because it's a key driver of so much of the business you've been doing for the last number of years. What are you seeing? Talk about the housing market. Things have cooled down a bit. Do you think what are the key drivers of current activity?
Well, I think there's been a lot of a lot of good activity in the housing market for the last several years. In fact, even this year, we've seen housing prices rise pretty incredibly all the way through the year, with the first real change in pricing going down. It was really not until August. But even with housing prices coming down a little bit in August, we're still going to see housing prices in 2022 up about 8% for the year, and still up 40% since 2020. So still a very, very expensive marketplace. We are seeing a little bit of moderation, though, on the demand side, I think. Some of that we've seen through the numbers that the Mortgage Bankers Association puts out on new mortgage applications, which have been really slowing down here the last couple of months. But interestingly, the October number for pricing that was just released shows that housing prices picked up a little bit again. So we're going to see, that supply and demand kind of working out there, but people still making some decisions. We'll talk a little bit more about the housing market here in a minute, but I think that the moderation has started, but it's not a complete shutdown.
Talk a little bit about more of a long-term perspective, because I think what you're going to tell us is that there is still a pretty chronic housing shortage that's a key driver.
No, there absolutely is. In the U.S., we have a housing shortage. Some people say it's around 3.8 million units, including multifamily. It's something that we've been trying to dig out or accommodate for the last probably 10 to 12 years. And it's something that is keeping that housing market component of the economy fairly stable, even as we might see other things slow down.
Yeah. So do you then, if you were a manufacturer, what are you seeing in is it affecting current production? Are you changing your forecast? How are you adjusting to the what's going on in the broader economy?
Well, I think what you've seen is, as a manufacturer, you would see, some moderation in what's been going in. The drivers of the housing market and that underbuilt piece is, higher population, household creations, and construction shortages. So, one of the limiting factors has been the ability to get labor, the ability to get all of the supply chain working together in order to get homes built. Even with a moderation this year in in housing demand, you're still going to see about 1.5 million to 1.5 to 1.6 million housing starts in 2022, which is still a very strong market.
Very
so
healthy
even
number.
if it were, even if it were to slow down a little bit on the demand side, the fact is, I believe you're going to still see, that pent up demand or that underbuilt a piece of it still carry through, and it's really going to be driven on the supply chain's ability to build through and get labor to actually build those units going forward.
Do you think that there's a change in the mix of the types of houses based on higher interest rates, inflation impact on the overall cost?
Absolutely, I think there is. There's when you think about how people buy new homes in particular, or buy or even move into to change homes, the real driver is the monthly payment. No, people don't really buy rates; they buy the monthly payment, and it's what they compare it to. So I like to talk about what's really driving the underlying market today, new market today, is I call it the 3 M's: migration, move up, and move out. In the terms of the migration piece of the market, people are still moving from higher cost areas to lower cost areas. So when they're looking at what it costs them to get a similar house or even a move up house in a lower cost area, they're still looking at that payment and they're saying, it still makes sense. Even if interest rates are slightly higher, the payment is still about the same for what I'm looking for. That move up piece of the market is where people are trying to stay in the same location and maybe move up to a bigger house or more amenities or different location within a same market. That's a little harder right now because you don't have that arbitrage between what I'm paying and what I can get. It's truly going to move up, and that tends to lead, if they can even find a home to buy. If they can't find a home to buy, that tends to lead to more high ticket item repair and remodel, which is still an area that's interesting to building products manufacturers. The move out piece, I think, is still vibrant as well, which is rents are going up and have gone up quite a bit. When you compare that to what you can get for a mortgage these days, people are making that decision to move out of rentals and into homes. Where we're not seeing a lot of demand at this point is those first time starter homes. There's a kind of a difference in what the starter home looks like, or at least what I'm hearing about is as you move out of those apartments with their amenities and all the things people have gotten used to, they're looking at a starter home that's got some more amenities in it. The finishes are a little bit different, and some of the community amenities might be a little bit different to model more of what they've been used to renting.
Interesting.
And so I think there's a category in there that's going to be a little bit more interesting. But real starter homes and those move-up homes, that's probably the area that we're going to see slow down the fastest.
Yep. The most economically sensitive population. So, but overall, it sounds like you're actually pretty positive. Maybe off the peak, but still plenty of pent-up demand, and businesses feel like they can still expect a pretty good level of activity.
Yeah, I think so. Even in a slowdown, you still got enough underbuilt that you've got at least some stability. Even if those housing starts were to drop a little bit over the next year or so, still well over 1 million.
Gary, you talked about supply chain, and I actually had a whole podcast. The last episode was on supply chain issues, but talk about it from the perspective of building products and home builders. What have been the key issues impacting that sector from a supply chain standpoint over the last couple of years?
Well, I think it's kind of been a whole rota, right? It depends on what the product's been at a particular time. There have been certain building products that have had their time in the spotlight.
Lumber prices,
and a lot of them have had to do with how stretched out was the supply chain to begin with. A lot of building products are regional in nature anyway. They happen to be sourced very, very close to where where they're supplied. It's the longer extended supply chains that have been the bigger problems. Without getting into specific commodities at a particular time, they've kind of all had their time in the chute. What I'm hearing today is that the supply chain issues are still recovering, but certainly suppliers have reduced the cycle time, and there's been obviously adaptation around working around that. But labor shortage continues to be something that's plaguing not only building products, manufacturers, builders, but really almost every industry, and that continues to affect the supply chain. Obviously, as you need the people involved in making those products and delivering those products as well.
The discussion I got into in the last podcast was really short-term and long-term reaction to some of the supply chain issues. What do you think happens in a little bit longer-term perspective? Do you think that people start moving production closer, or is that just really hard to do given the nature of the business?
Yeah, I think in general we've seen the supply chain. The trend to lengthen and globalize those supply chains is kind of moderated. People have been bringing things that call it onshoring or whatever you want, has happened and started to happen where it can. And I think we see more trends towards that, of sourcing product, or at least having sources for product in the same region that you manufacture and sell your product. That seems to be the mantra today, certainly of manufacturers, compared to the global supply chain mantra that we heard of, even 5 or 6 years ago. So I think you're going to see a lot more of that happening. Some of it already has, but it took years or decades to globalize the supply chain. It's probably going to take a long time to reintegrate it back into a regional focus.
There's so much focus on inflation right now. How do you think that the building products industry is doing in terms of passing higher costs through to the consumer? Where does the pricing power lie right now in building products?
I think for the most part, we saw a lot of the pricing passing through for a long period of time. Certainly the last couple of years have been very, very very favorable for passing on the inflation. But we're seeing rising costs moderating to some extent. And although they're moderating, it's still at a very high level. The issue is becoming a little harder to pass pricing along because certainly, as prices moderate, people expect prices to go down for everything that they have, but they're really settled at a higher level. So there's maybe more stability at a higher level with a harder opportunity to pass pricing on. Labor is still, as I said, a concern, and that certainly drives price and is something that needs to be covered as well.
Well, we're still, I think, operating under the threat of some sort of rail strike. It hasn't quite been put to bed yet. How do you think that plays out if we have a disruption in rail or port operations?
Well, I think transportation in general has been an issue, really through the pandemic, and it has suffered from this labor availability on the trucking side. I think that's still a shortage and still a concern. It's still a high expense. So without rail in that process, the movement of goods, even across the country, becomes a deterrent, and it's going to extend this supply chain disruption that we've seen. All of that, unfortunately, drives inflation as well. So the costs that we're already seeing on over-the-road freight and the scarcity, quite frankly, of drivers and trucks to move that stuff is just going to be exacerbated with a shutdown of rail.
Yeah. Gary, you're on a public company board. You've been on a few actually, and I know you network a lot with other CEOs. So what's the CEO community talking about right now? What are the top of mind issues as you speak with some of your industry and colleagues?
I think most everybody I speak with is concerned about a recession, but there's a certain optimism about their own businesses that's still there. So lot of people making the moves to be prepared, either through people actions, layoffs, or if they haven't done that already, they're planning to. And certainly watching cost cutting is certainly on the top of the mind for a lot of people that I'm talking with. But they're generally still upbeat about their own businesses and still using the opportunity to invest in their businesses, particularly around innovation and growth. You got to think about the last few years. We've been through some unprecedented
Yep.
business environments. We've had a pandemic. We've had the supply chain issues that we've talked about, labor issues, weather in a lot of areas. So this idea of looking ahead and potentially seeing a recession looming or a slowdown for sure looming, everybody seems to be wanting to be ahead of that and not waiting to react later. So I think the levers are being pulled now, and certainly everybody that I'm talking to is very, very concerned about that.
Mm-hmm. Mm-hmm. Gary, flipping from the public company CEO script, I wonder if you have any comments on private equity. A lot of the podcast audience does a lot of business with the private equity world, and there has been a lot of private equity activity over time in building products. And now that we have some disruption and possibly stock prices dropping, I wonder whether you see opportunity or whether you think that there's interest in from a private equity standpoint in this space.
Well, I think it's it's an interesting question. There's a lot of deal opportunity out there. I do know that the availability of capital has been an issue for a short period of time, but there's still some great opportunities out there, particularly as things slow down and values get back into line for a lot of the businesses in this particular segment. There's still opportunities within the channel side of the equation, as well as in consolidation of some of the manufacturers and building products as well. Some of the areas still pose some great opportunities for better efficiencies, better scale, and I think that when we look at kind of getting through this unprecedented period that we've been through, there are some companies that are winning and some that have some opportunities. And I think as you start looking at those, and you can make those combinations and come up with a pretty good investment thesis around consolidation in particular areas, both on the channel side, as I said, and on the manufacturing supply side.
Yeah.
Okay, so question I have for you, Barry, is as you think about lenders, how should manufacturers or how do lenders are thinking about manufacturers in this segment and potential slowdowns or the changes in the markets? What are the things you guys are looking at?
Yeah. I mean, most of my experience is in and around the asset-based financing directly, and the nice thing about the format of those loans is that the availability rises and falls with working capital. So we've seen a huge run up in working capital because of supply chain issues, because of high demand, and so the lenders have actually been very bullish on the space. They've made very good returns on it. I think there's got to be, coming into economic headwinds, there's got to be elevated concern around building products, around anything that's housing related. Having said that, I think the lenders will remain bullish on providing credit there. The broader markets, the cash flow market, whether it's high yield or institutional term loan market, I think is going to have a harder time because you're going to see some of the comparables in the space really gapping out in the secondary market, which means raising fresh capital will be harder. I do think that the banks will be cautious, but will be very eager to support their customers in this environment, which should make. I can't speak to the consolidation you were just mentioning earlier. I think that requires more than just a senior secured loan. But to the extent that lenders are being accommodative and supportive of their lenders, I think that they will be and have always been in this space. It's a space they're really familiar with.
No, that's great. Thanks for that.
Yeah, Gary, maybe we should just wrap up. I mean, you've got a better crystal ball than most in this sector. What do you think? 12 months from now, when we do the repeat on this, what will we be talking about and looking back on?
Oh, I don't know about better crystal ball, but I think what I'm hearing, what I'm seeing is certainly slow down. We can see that, a little bit in the housing, but just a shift as well in where it's happening. The robust repair and remodel market will certainly slow down, even if housing pulls through a little bit. I think we'll start to, which is probably good for the supply chain recovery.
Mm-hmm. Yep.
But will certainly have an effect on prices and certainly on housing prices, but also maybe some moderation on material costs as well, which is certainly a driver for why housing has gotten so expensive.
Right.
So I think when we look back, we'll see that some prudent cost cutting now will pay off later in performance of these companies. But the little bit of a slowdown will probably help moderate and certainly help the supply chain issues that we've been currently seeing.
I hope you're right on all counts. I hope you're right that the supply chain moderates and that whatever downturn we see is not as deep as some are forecasting, just because there's still all that pent up demand. So, hey, Gary, thanks so much for joining today. This has been really fun. We'll do it again soon.
Thank you, Barry. Really appreciate it.
Thanks again to Gary Michel for joining me on the In the Know podcast. Gary has had a number of senior level positions in building products and consumer related companies throughout his career, including most recently as chairman and CEO of JELD-WEN Holding. Gary's got great perspective, both from a manufacturing and a marketing standpoint, on all of the industries that he's worked in, as well as their respective supply chains. And he shared that with us in the podcast. A couple of conclusions he came to. First of all, with respect to building products, the near-term slowdown is predictable based on all of the economic data, but Gary's perspective is that pricing and production levels are actually significantly elevated over the last number of years. So a slowdown will probably occur, but will remain at a very elevated level, and that's important for the production side, especially for anybody who listens to this podcast and wants to lend money into the building products industry. The key driver for that is that there still remains a significant shortage of housing in this country. It's systemic. It's not something that can be solved in the short run, and that it'll impact demand for some time to come by putting a floor under the demand drop off. Interest rates and supply chain issues may impact the size of homes and the location that consumers wish to buy in, but the focus from a consumer standpoint is much more on the monthly cost than some of the other macro factors that we hear about in the news every day, like interest rates. And labor markets. So I think his prediction overall feels sound, that adjustments are coming, but overall it's still a fairly healthy segment. Gary sees opportunity for all of the stronger companies to consolidate over time, to strengthen themselves by being aggressive right now from a cost and supply chain standpoint, and he thinks that smart CEOs are doing that as we speak. So that's this episode. I'd like to thank SFNet for all of their continued support for the In the Know podcast. And I'd also like to, as I always try to, thank Hilco Global for their support of the entire In the Know podcast series.